Going into 2025, we were all prepared to have an onslaught of various estate tax moves with the pending estate tax sunset that was scheduled to occur prior to the passage of the One Big Beautiful Bill Act. When that bill passed and raised the estate limit up to a continuing level of where it is, somewhere in the 13, 14, $15 million range for the foreseeable future, there was less of a rush into these estate planning items than we would have expected initially going into 2025. All of the plans that were kind of on the forefront of people's mind to get done by the end of 2025 are still very viable plans and are still things that people should be considering. So things like grantor retained annuity trusts or spousal life annuity trusts or intentionally defective grantor trusts in the case of certain assets for children. All of these plans are still very viable, still make sense. What has changed, I think, is there's no longer the sword hanging over someone's neck or the fire under their bottom to make them want to do this as fast as possible. People feel like they have more times. In terms of the valuation discounts, they are still viable. They are still very, very usable, but scrutiny on those has been getting higher during IRS examinations. And with continued use of AI tools and the IRS actually moving estate and gift tax returns into electronic filing, I would not be surprised to see increased scrutiny on over those, especially if people are trying to use perhaps older discount valuation factors from when the credit rates were different than they are right now. So all these plans still very viable, still things that everybody should be considering, but there is no longer this incredible sense of urgency like there was 365 days ago.